Hey, renter retires. It's Adam Schroeder here with another episode, and I am once again joined by the founder and CEO of Rent to Retirement, Zach Lemaster. And today we have a special guest. It is Shawn Moore. He is the founder and CEO of Vodyssey, who just so happened to be the largest vacation rental education company in the world. So, Shawn, thanks for taking the time to join us today.
Awesome, guys. Thanks for having me. Really excited to chat with you guys about short-term rentals.
Yeah. So tell us just a little bit about how you got into short-term rentals, because while the space has been around for a long time, the knowledge of it, because of Airbnb, VRBO, those types of platforms have really kind of made the knowledge of it explode recently. So how did you get involved in short-term rentals?
Yeah. It was a long road for us. I've been a full-time real estate investor for 22 years. So I've seen a lot of different asset classes. In fact, you'll never hear me talk bad about almost any of them. I love real estate in general. I think every asset class has its pros and cons. I know you guys do a lot of the turnkey single family rentals. I used to own a lot of single family rentals as well. I think that everything checks off a lot of boxes. And as I kind of progressed through life and through some things that we went through, I started getting really introduced early on into the really high-end resort properties, like high-end type resort vacation type properties. And always loved building businesses as well. And those two things really merged well with short-term rentals. And so back in about 2012 through 2015, we really started to morph our business into a short-term rental. Like, okay, this is kind of an asset that we want to really explore as our vehicle for lifestyle and financial freedom. And I went through a lot of the different asset classes, especially some of the short-term ones like the fix and flip, development deals, build job stuff. And I realized I was working for a paycheck then. And I started to realize early on that I really needed to start to focus on assets that could create passive income. Naturally, I gravitated towards single family rentals, and we bought about 52 single family rentals, had a nice little portfolio and enjoyed them. And they were a good asset for me. And then we started getting into the really high-end resort properties. And I started to just realize that my interest was much more on the resort side than it was with my single family rentals. And this was before really the kind of where Airbnbs and VRBOs and all that really became mainstream and short-term rentals became really mainstream. I had a property back in 2006 and really wasn't paying attention to that. It was a cabin in Utah. And I realized that when the markets really started going down, that my cabin in Utah was on a mountain lake in Utah, and we were renting it on the short-term side as vacation rental. And I started to realize how well it performed. And so I started to started opening my eyes. We were still doing a lot of the high-end stuff. And then I started having kids. And, when you have kids, you start asking different questions. And I happened to be on the beach in Hawaii with my son. And I was working on a big development deal. And I was kind of visibly frustrated. And my son was like, he's 4 years old. And he's like, Dad, if Utah, or if real estate sucks in Utah, why don't you sell it in Hawaii, right? He's like, you should just sell houses here, right? Let's just work in Hawaii. It's way funner. And honestly, that conversation back in 2012, 13, 14, that area, I started to say, what do I like about real estate? And I loved like building passive investments, but I've always been an entrepreneur. I've always really liked, even though I've always been a full-time investor, I've always liked the business aspect of things. And that's where short-term rentals kind of started to click with me as well, is I'm able to put an entrepreneurial spin on a real estate asset. And so we really started to explore it. And that's kind of where we ended up in 2015, where we really we rolled everything over at that time into the short-term rental game. And then obviously you can see what's kind of happened, where it's become so mainstream. Back then, it was nowhere near as popular as it is now. And now it's very much a mainstream asset class. But I really like it because there's, and this is a pro and a con of it, right? They take a little bit more time. You have to make sure that you're creating a unique customer experience and all these different things. You have to understand marketing. You have to understand all these different things that we don't have to worry about so much on, like some of the other asset classes. But for me, I really enjoyed that part of it.
Shawn, this is something we get asked about almost on a daily basis is short-term, because there's a lot of interest in it right now, and it is kind of blowing up. It's this industry that is becoming more regulated, but I think people are starting to understand that, hey, short-term rental, there's a lot of benefits here. While it's kind of a different asset class than, say, a long-term rental and different managerial aspect, like there is potential to earn significantly more income on a property renting out on a short-term basis. And what we found is sometimes it's not always just thinking about the resort aspect, like these high-end properties. Like actually, sometimes a Midwestern house, you can furnish and turn into a short-term rental and still even potentially double your income. So this is something we get asked about quite significantly. Not an area of expertise for us, although we own short-term rentals. I mean, it was interesting how you and I connected through a short-term rental property in Colorado that I purchased. And then I was, vetting property managers. I found a property manager that I was checking references for, and the references, I think 3 of the 4 references I checked were actually part of your group, and everyone kept checking. They're saying, "Hey, you got to check out, this group. There's some really cool stuff going on," and they put me in touch with you, and it's like, and that's just networking, and working with the right people. So that was really cool. But that I ended up hiring that manager, and he does an excellent job, largely in part due to some of the, the training that you go through with your program. And so it's really cool to kind of mend and see it come full cycle with what you offer to the short-term community, which is really how to set up a successful short-term business. And it'll also create this into this business where you can have what you call lifestyle assets, right? I mean, we talked about the Midwestern properties that, a lot of people look from a cash flow perspective, but also you can engineer your lifestyle by having areas that you also want to visit and are still producing positive income. But let's start a little bit with about just the benefits of using or having a short-term rental over a long-term. We typically focus on long-term rentals, but we have a lot of people that are also interested in short-term. So if you could just kind of go through some of the benefits for short-term rentals in your mind, what would those be?
Yeah. And I think that one thing that you said really resonated with me that I hope people picked up on is because there's a lot of people that come to us that just assume that just because it's a short-term rental, it's going to make more money. I'm going to convert to a short-term rental, it's going to make more money. That's not the case. You mentioned, hey, they have the potential to make more, and that can be true. But there's a lot of factors that decide whether it actually is a better short-term rental or even a long-term rental. And sometimes there is crossover. And there are markets that you don't have to have. Short-term rentals are like one of our most successful members inside of our group that we help with and build their portfolio. He's a traveling nurse, and he has a portfolio of properties around major medical centers. And they're not vacation homes, right? They're geared toward a certain target audience. But short-term rentals have the potential to make more, which is what's fun about them. But you really have to understand the market you're getting into, the demographic you're going after, who your target audience is, what the customer experience looks like. And this is where a lot of people mess up. And really, frankly, it's one of the things that is a drawback of a short-term rental. If you don't enjoy figuring out, like you're in the hospitality game now, right? There's a difference between a host and a landlord. And, if you're in the hospitality game, it's about delivering a unique experience. It doesn't matter whether it's a vacation home or even, around a major medical center. You've got a target audience that you've got to create a customer experience for in order to make more money. It's also one of the things I love about it. I always tell people, if we own similar properties on the same street in the same city and we're doing it on the long-term side, let's say the condition of the house is all fairly equal, right? If the asset itself is fairly equal, our market rents are going to be pretty close to each other. One of the things with short-term rentals is you can have a property. You and I could both own a property on the same lake, both beautiful cabins. Let's say they're lakefront properties, both of them assets very similar, same location. One of us can make double the money the other person can make by understanding the game of delivering that experience, the game of understanding how to market and get out in front of and articulate what you have to offer. That's where I feel like it gets fun. But it also, if you're not willing to learn that game, just because I throw it on Airbnb or VRBO and it's a short-term rental now does not mean I'm going to make more money.
Well, that's a huge point, because I think a lot of people approach this of like, oh, I want to get into the short-term rental game, and I see the potential and it's exciting and something new. And so they do it, but they don't do it with clear intention and an action plan and a strategy, and really fully understanding all those aspects that you mentioned. And so obviously everyone that joins your community, just following the stats are significantly more successful because you've outlined that plan for them. Here's how to be successful. Here's how to look at the metrics. I know you have all sorts of data across the country on stuff, and you're coaching people on how to build a successful short-term rental portfolio that's sustainable long-term. And so that's how you set yourself up for success, really, in any investment endeavor. But,
exactly. It's the same. We're all looking at analytics and data, and maybe it's different data points, right? When you guys are analyzing markets, we're looking at, what is the average acquisition cost? What is the average revenue? And how does that match up to get us the returns that we're looking at? We're looking at the same things on the short-term rental side, but sometimes it can be a little more difficult because on the revenue side, you've got a lot of moving parts. You've got seasonality, you've got nightly rates that are fluctuating all the time. You've got occupancy that's going up and down depending on times of the year. You've got a big range of nightly rates, and you got to figure out, like we were talking about a little bit before the show, you really have to identify what the average booking time is in an area, and you have to play this game that you have to be on top of on a regular basis, not only just when you're diving into the game and buying the property, but also as you manage these properties. And so I'm a big proponent of full service management companies like you've set up on your property that we were talking about in Colorado. Otherwise, these properties can become a full-time job really quickly, right?
Well, I think that's a concern of a lot of people is, I don't want to, or deterrent from short-term rental is, I don't want to be a full-time manager, know, and deal with people coming and going. There is more management to it, and that's why management costs more. But you just factor it in. But you still can set this up to be somewhat of a passive investment, right?
Yes. Yeah. When we set them up, I always tell people the time we invest, at least in my view of this world and how we set them up, is going to be on the front end. I don't let anybody do any of my underwriting. I analyze and underwrite my own deals in my own markets. And we teach our membership base to do the same. We also are very involved in that setup phase. What are we going to deliver? So I buy the house. I make sure it's set up to deliver a great, unique customer experience. Then we turn it over to the management companies and our management partners to do the rest of the work. Their job is to do it and deliver that to our customer base and do the marketing and those things and the right management company, they're worth their weight in gold. But sometimes they're hard to find as well, right? That's a hard part of the process. I always tell people that's my least favorite part of the process is finding the right management company. I don't like to manage these properties, but I also don't like to select the right manager because sometimes they're hard to find because most of them are just going to kind of operate in the middle of the market we find. And so it's really understanding. You have to understand the game at a high level, which you should anyways at whatever asset or whatever game you're going to go play, right? If you don't understand it, team up with people who do, right? And then make sure that the asset is set up so that you can have them become passive. My portfolio, I look at the P&L at the end of every month, and I look at the calendar when we want to go use our properties. But they don't just turn like that, right? We have to get them set up like that, and sometimes that takes a couple months to get that done.
We saw a big change during COVID of, when people couldn't or didn't want to fly, and they were driving a lot of places, and it really kind of sparked, drivable areas.
Yeah.
Has that continued as the economies have opened up, as travel has opened up? Like, are we still seeing these drivable destinations stay at the level that they were during the pandemic?
Great point there, Adam. And that's what we're watching on all these markets. And so we did see when kind of COVID and all the restrictions and travel restrictions kind of started to lift, we did see a lot of these other markets open up, like your Hawaii's, the Caribbeans, these fly, over in Europe, things started to open up. Well, interestingly, as things started to shift around and things got a lot more expensive to travel, gas got a lot more expensive and all that stuff. Well, all of a sudden airline tickets got a lot more expensive as well. And so people started the last 4 or 5 months, we've seen the drivable destinations again take a big uptick in bookings. And so we're starting to see that, and we anticipated that, especially as we go into a bit of a recession and a bit of a correction in the markets. We anticipate that the drivable destinations are going to do very, very well still, and we're starting to see, and I think that's why we also see a lot of the last minute bookings and the lead time shrinking, because people have the flexibility to just kind of say, hey, maybe we're going to go, maybe we're not. They don't have to think in advance and get all those plane tickets and everything else. And so I think we're going to actually see that trend continue. And like I always tell people, some of my favorite markets right now are those backyard resort communities. They're not the Class A resort towns that everybody's heard of. One, because you can buy into those markets for a cheaper price, right? The acquisition price is lower, but the revenue is really nice compared to the acquisition price in those markets. And so those types of markets are doing really well. We're also seeing a rebound in the urban markets. We saw urban markets really take a significant hit during the COVID, era. And then now that that's kind of lifted a little bit, we're seeing those urban markets start to rebound significantly. And, but then you talk about restrictions, right? This has kind of been the year of really strict rules, regulations, restrictions, especially in the short-term rental game. And that's another really important thing to look at and consider as you're diving into the game. Because there's a lot of areas that have really strict restrictions. Doesn't mean you can't play the game, but you better understand how you're going to play it. And there are some areas that you're not going to play it the way you thought you might, just because you think that you saw some properties on Airbnb or VRBO.
It's definitely an evolving, type of industry that is subject to regulation all the time, right? And so, I mean, that's just why it's so much more essential that you have people that are familiar with the industry, because the last thing you want to do is get into a short-term rental that, great, you have success for 1 or 2 years, and then things change dramatically. So you want to position yourself in.
And that's why it's so key to invest in an area that has a rule or a regulation almost in place. Like I always look for areas that have a yes or a no, because if you have a yes and they decide to change something, you're going to get most likely grandfathered in. I have yet to find an area that had rules and licensing and permitting and everything, and you had your short-term rental permit in place, and they jerked it from you. Where people say the rules changed on them was they actually put rules in place. There's that gray area, and has been for a while in a lot of areas, where they didn't say you could or they didn't say you couldn't. And then all of a sudden it votes and they say you can't. And you're like, okay, now I bought this property and I can't do this anymore. That's where people get into trouble. It's one of the biggest pieces of advice I tell people when they get into the game. Just invest in areas that you are able to go purchase and apply for and get a short-term rental permit and licensing and they have rules around it. Those are the safest areas to invest.
Like with the one that we purchased, it even takes it to the further extent, not just as can you use it as a short-term rental or not, or what is the minimum night stay. There's certain things like that we've seen, but like with ours is a larger house. It's a 9,000 square foot, I think 9-bed, 9-bath house, and so it also is we need a conditional use permit, and there's additional regulations with that, potential wedding venue. Like there's all sorts of stuff that we have to go through, and having the right people in place to help us, make sure that we're watching that and applying for those on time and attending those HOA and city planning meetings. Those are essential. So, but before we get, a little bit more too deep in the woods with kind of the market and things like this, I'd like to talk more about like your program, Shawn, and kind of maybe some success stories or things that you really help people, how you help them set up for success. Can we talk a little bit more about, what you've done with your industry as being a leader in this industry and really helping your community be successful short-term investors?
Yeah, would love to. And I think the reason we've had so much success in what we're doing is we really want, our entire goal here at Vodyssey is to have investors, because we work with investors. We don't do any of the co-hosting, the arbitrage, or anything that people have heard about, like, hey, make money with somebody else's property. We're investors who are actually buying properties. That's a big, when you're writing the name on the line and you're buying a property, that's a big check. It's a big decision, right? And so we want our investors to walk into this game with their eyes wide open. What that means, though, is they can't just go into it understanding how to buy the right property, because this is a long-term process. These are long-term investments. Even though they're short-term rentals, they're long-term investments for us. So we really focus on all three major aspects of the game. And one is the acquisition phase. Have to really understand how to underwrite your markets, locations, your properties, regulations, all those things that we've kind of talked about. The next phase is that setup and management phase. How are we going to set this property up to stand out and deliver a great experience? And a lot of people, they forget about that. The acquisition phase, especially the last few years, has felt like you're in a marathon, running a marathon or a 12-round heavyweight match. You're beat up, you're making multiple offers, you're getting beat out. You finally get the property, you're like, oh, thank God, I'm going to put it on Airbnb or VRBO. That's not where the game ends. Now we have to be very, very deliberate about how we're going to set this property up. And what I mean by that is letting investors know that you now own a little business. What can you do in your business to create an amazing customer experience? Who is your target audience? All that stuff. So we really focus in on that. And then that third phase of marketing and saying, now what are we going to do to articulate what we have to offer? We have a great property. We set it up amazing. How are we going to articulate it out there into the crowd to have somebody say, oh, I get what Shawn has to offer? And so those are major aspects of the game. And a lot of people don't think about that. Like, a lot of people have no clue how to do, Facebook ads, or, how even to stand out on Airbnb or VRBO. But more importantly, what are you going to do to drive direct bookings? These are crowded markets. They continue to get more and more crowded as short-term rentals get more and more popular. And so I think the biggest thing for us is really focusing in on success in all three of those major phases, and having a process that somebody can follow. Say, okay, here's what I need to do here. Now I go to step 2, and this is what I need to do here before I move to step 3. And because of that, we've had and seen a lot of people have some really great success, and we've had a lot of fun with it.
Yeah, one of the stats that you shared with me that I was really impressed to see is, I think it's AirDNA or one of these statistical resources online that can show like the top performing assets in each market. Yeah. And it kind of breaks them down based on size and everything else. And so like some of the members that I talked to, part of your community, like they consistently had like their properties were in the top 5 performing out of that entire market. Yeah. Right. And that's a significant difference. Like we're talking hundreds of thousands of dollars of revenue for some of these areas, the ones that I was looking at least. And that's important because that's going to be dramatically different. That's going to allow you to afford a different property and cash flow better. Whereas someone else looking at that same property, may not, without those systems in place, may not be able to make that a cash flowing asset to be real successful. So, I mean, this is, way more complicated than just buying a property and throwing it on Airbnb, right? Yeah. And I know you throw out a lot of free resources. I just want to put this out there as well for anyone that's interested to learn about Shawn and his program and really making your short-term rental successful. Whether you already own short-term rentals or you're new to this game and want to get into it, these are essential things that can help you really take your business to the next level, because this is a business, and be successful. Shawn, talk about your free book that you're going to give away to our community by following the link renttoretirement.com//STR. You have some free giveaways for our community.
Yeah, we're gonna make sure that everybody has access to our book. It's a bestseller on Amazon. You guys can check it out and see the reviews on there. It's called "What the Hell is a Lifestyle Asset?" And it says how, and the subtitle is "How to Build Lifestyle and Financial Freedom Investing in Vacation Homes." And this book, and we're also going to put on for your guys' audience, we're going to make sure they have access to the audiobook as well, so they can get the actual book and the audiobook on there. But what the book does is we've broken down our process into a 9-step process. There's 3 phases of each of those major phases, right? And we've broken that down, and the book is a really good overview of exactly what we're talking about on how to make this asset class be something that doesn't turn into a second job, doesn't turn into be a headache for you, but it can be really, really fun to own. One of the things that I define a lifestyle asset as is one of the fun things about a lot of these types of properties is we get the personal use out of them, right? A lot of our members are buying, you don't have to, but a lot of our members are buying in areas that they want to go visit, right? That they would love to own a property. Because short-term rentals are what they are, it allows us to go buy properties in areas that typically would never cash flow as a long-term rental, right? You're not going to go most likely into even your property, Zach, that you just purchased. It's never going to probably pencil out as a long-term rental. If it would, you would probably put it maybe as a long-term rental if you didn't want to use it personally. But if it doesn't, we can go into a lot of these areas with a lifestyle asset and be able to not only cash flow a property that normally wouldn't cash flow any other way, but also it's not going to be used all the time. So now all of a sudden I'm building a portfolio of properties that we can go use personally. And so that's what's really fun. And the book really does a good job, I think, of explaining exactly what a lifestyle asset is, and then how to go think about putting it together as you're reading it, you'll think about how to put it together and apply it to your own life and situation in some of the areas that you may have been thinking about owning a vacation home. And now all of a sudden you think instead of being a liability, maybe turning it into an asset that starts to pay for itself and maybe make a little bit of money as well.
I would like to note that Zach bought this massive one, and we have not had a single company retreat to it. So I'm guessing that means he's got
all booked, man.
A lot of. I was going to say, he must have a really low vacancy rate and doesn't want to utilize it. So Shawn, when it comes to, buying and managing short-term rentals, what are some of the maybe one or two best tips you can give people to really maybe set themselves up business-wise, or even their maybe furnishing the home? What are some big things you can do there? And what are some of the biggest, one or two mistakes that people make when they get into it?
Yeah, awesome. And I think I think probably the mistakes are, and what you should do probably are answered the same way, right? One of the biggest mistakes that I see people make is they don't have a clear idea of what their personal property goals are, right? They're when you go into a game to play, especially the short-term rental game, you can start to look at a whole bunch of different markets. You can start to see a lot of different things. And I see this with our members all the time. So we got a lot of people that are investing in this. And so you come in and thinking, okay, maybe I want to buy, maybe I want to go down to Destin, Florida. And then I talk to Zach and he's got a property in Breckenridge. I'm like, well, maybe I want to go over there, And so without having really good property goals and what you really want out of it, right? Is it truly a lifestyle asset? Are we more of an investor where we just want the cash flow? We're going to look at different markets differently because of that. And then the biggest mistake, and I feel like it is a mistake, but I also feel like it's also the biggest opportunity for us to really do what Zach talks about and operate at the top of these markets, because the difference in revenue is huge, is not going into it with this developing a unique experience for a specific target audience. Naturally, when we buy something, we're like, well, I want anybody who wants to come to use it. And I used to have a property. I've actually sold it now, but it was up by Yellowstone National Park, and it was on a lake community, right on a lake. It was called Henry's Lake up there. We're 10 minutes from Yellowstone National Park. $1 million cabin. My neighbors got probably $1.5 million cabin, nicer cabin than mine. Yet we made double the nightly rate that he made. We would rent it for $1,500 a night. He would rent it for about $700 or $800 a night. And the only reason is he had a better cabin than I did. We were on the exact same lake. The only reason is because we were very deliberate about who we set that property up for and how we marketed and targeted them. And what we did is it was set up for fly fishermen. Well, we kind of ignored the whole Yellowstone draw. That's a big profit driver and all the families and everything coming up there. But we really niched it down to a small group of people, and they were fly fishermen, and the property was set up specifically for them. And I don't mean a fly fishing theme. I mean, we had wader drying stations, and they had their drift boats, and they had rod carriers. When they checked in, they had a custom fly box tied for them. And I'd had handwritten notes with with a map with highlighters on, hey, go fish behind this fallen log on this bend, and there's always fish stacked there. So we really were deliberate about speaking to that group and making the experience really nice for them. My guests knew they could rent my neighbor's property for half price, but why didn't they? Because I was very deliberate about the experience that they were going to have. And I was deliberate about what they were coming to the area to do, right? I ignored everything else. And we were a waitlist only property. And so when I say kind of the mistake that people are making, nobody's doing that right now. There's very, very few people that are doing that. There are people that will go with a theme or things like that, but they're not thinking about the experience. But it's also the biggest opportunity as you're setting these properties up, because it's really crowded in the middle of the market. It's really, really crowded, but it's not nearly as crowded at the top of the market. And so if people could realize that, the difference in their bottom line is massive.
Shawn, that's a huge point. I'm so glad that you mentioned that and even gave us a case study example, because that's something that is extremely important right now, is to make that unique experience. We've seen, actually, for anyone that is familiar in the short-term space and Airbnb specifically, they've changed their algorithms where those actual experiences get highlighted and showcased way more and featured. Like, they are moving more towards a direction of experiential type of, where if you are in the middle of the road, kind of just average short-term rental, you're not going to get nearly the visibility. So there's also that aspect of it too. But being intentional with the type of guests that you're actually catering to. And that's something I kind of had to wrap my head around, because with this recent property we acquired, I'm working with my manager to say, let's just, let's try to keep it as booked as much as we can. Well, no, let's take it a step further and try to keep it booked with the right people, and actually turn down some guests, because there's certain type of people you want in there that are going to come year after year, corporate events and things like this. Like, we're being very intentional about that. And that's where, having that community and that network, and I've talked to so many people in your community that are, that's how I found out about you. And they're like, this is where we've learned this and this and this, which has allowed us to be significantly more successful and intentional in our real estate endeavors in the short-term space. So, I mean, the value is there. Yeah. And I think that's hugely important. I just want to kind of re-hit this. I don't know if we covered just kind of bullet point, big picture for someone that has long-term rentals, or maybe is getting into the rental game. Like what are if we could bullet point, what are the benefits in your mind, or the pros of having short-term rental? And we'll cover the potential cons as well. But okay, so potential for higher income on the property, potentially potential to acquire properties that just wouldn't work otherwise as a long-term rental. The ability to visit these properties, and that falls into that lifestyle asset, right? Yeah. And just enjoy that part of your life and have pride of ownership there. What else am I missing?
Those are the big ones. That's what I always tell people. The biggest one is you're building an asset, and you can be very intentional about building a portfolio of assets that you're really excited about owning, that you have a lot of fun with owning. And like I always tell people, that even the people in my group, I always say, we're all following the same blueprint. We're all following the same path, but we're all building different portfolios, right? We're building a portfolio that fits our property goals. And I think that's the biggest benefit. But part of it is, you already hit on it, is we get to use these properties, but also, we get to kind of show them off. We get to talk about, hey, I've got a beach house, I got a mountain house, and yet they're still really good financial assets. And so that's the biggest thing, is they become lifestyle assets. Like, right, when I used to own my portfolio of, duplexes and single family homes, I never told my wife and kids, hey, grab your bags, we're going to the duplex for the weekend, right? And so it's a kind of a different feel of that type of an asset. And the funny thing is, as some of our properties, one of my properties haven't even been to in a year and a half. It's not like we use them all the time, because a lot of times, to your point earlier, they're booked. We're looking at them, but it's a fun portfolio to own and build. And for me, I just like, it keeps my interest, right? I always tell people if I was a fish, I would have grown up to be about 8 inches long, because any shiny object that just went by me, I was going after and grabbing it, and then I would lose interest in it, right? And so for me, this is one of those types of assets that are long-term, that still keeps me interested in them for the short term, to be able to get to that end game.
Well, that's huge. You need to invest in, you need to have a strategy and invest on what fits your criteria, but having that aspect of being excited about what you're investing in, that's huge from a motivational standpoint. It's very important to put your passion into that and make sure you're exploring that. And it's exciting. It's exciting to own short-term rentals. And you can set them up as a business. So they're not, you're not having to actively manage those all the time. So, I think that holds a lot of people back, is that they don't like the idea, but you can have a property manager in there that's pretty much doing things, turnkey for you. It takes more work and, intentionality on the front end to do that. I'm going to throw 2 more bullet points out that I think are pros. When we compare to like the long-term rental, the first one would be the tax benefits.
We didn't even hit on that.
Zach hates talking taxes.
It's huge. It's a huge benefit. Yeah.
Our investing strategy now solely centers around the tax benefits. We already know what we're buying, but it's always what we're buying because of the tax benefits. And we ran a cost segregation study on the short-term rental that we purchased, just like with all real estate that we do. But the benefit, just to remind everyone that's unaware, when you have a short-term rental, you need to be actively engaged in this, right? But you have the ability to actually take accelerated depreciation, whereas with a long-term rental, you have to qualify as a real estate professional to do that. And talk to your CPA and tax strategist, of course. Disclaimer: I'm not one, but we've interviewed 100 of them, and everyone talks about this. They call it a loophole, short-term loophole, but it's basically, if you're operating if you own short-term rentals, that allows you to have additional tax benefits like accelerated depreciation beyond if you're not able to qualify as a real estate professional, which is a difficult thing to do from a long-term perspective. And that's even with your first one. You don't need to have this portfolio. So that's one benefit. And the other benefit, I think, with the asset classes that we're buying, you're likely going to have more long-term success and greater appreciation in these areas. I think that was probably going to outweigh some of the long-term rentals, is like over time, just buying in these areas, you're going to have strong appreciation. So we're all about it. We own short-term rentals, even though our business is centered around long-term and building that passive income portfolio. I think it's a good strategy to mix in some short-term rentals and just have a well-diversified portfolio. Let's talk on the other side of the fence a little bit, Shawn, about potential for, what are the downsides? What are the cons? What are the challenges with owning short-term rentals?
You're definitely going to want to have your finger on the pulse of what's going on, right? I don't manage my own properties, but I still am very interested in paying close attention to what's going on in the markets and with demand and everything else. They're not nearly as turnkey especially on the front end, when you're underwriting them. You're going to have to look at a lot of different data points. You're going to have to pull a lot of different stuff, put a lot of different stuff together. That is not rocket science. It's not hard, but it's more than what you will find on other asset classes. Not because you're still underwriting and analyzing every deal that you buy, no matter what asset class you're buying. The underwriting is, in my opinion, a little more cumbersome and a little bit more, there's a lot more moving parts. And so it makes it a little bit more of a logical, okay, where am I going to fit in here, right? There's going to be a wide range of revenue in every area. You're having to decide, how are you going to fit in? And you don't always want to say, I'm going to, it's not realistic to always say, I'm going to fit in at the top. And so you have to know where you're going to fit in. And so, and then if you're going to try to manage these properties yourself, then it's, which I'm not a proponent of that, but there's a lot of people out there that will tell you, oh, you should just try to learn the game and manage them yourself, because it sounds better than paying 20 or 30% right off the top to a management company. I don't suggest that, but if you run down that road, now all of a sudden this asset is very time consuming. You're going to have one or two properties and you're going to say, man, this has taken a lot of my time. Consider yourself a 24/7 concierge when you're trying to manage these properties. And that's why you pay 20 or 30% management instead of 8 or 10% that you would on a long-term rental.
It just comes down to the numbers, right? You just have to factor that managerial aspect in.
Exactly. You just underwrite into the game. And your point of, and not that I don't pay attention to it, but I don't talk a lot about it on the front end, is the appreciation side of it, because I don't want people to think that we're buying these to speculate. That's not a good game to play either. But when you're buying properties in nice areas and that are more expensive areas, they are going to most likely appreciate and have more upside on the appreciation, and it can be significant. And so, you can have pretty significant gains, even forgetting about what happened the last 3 or 4 years. Those gains are stupid. That I think that's going to slow down a little bit, but you're going to still see significant gains in these types of areas that make a big difference to the net worth and the bottom line. And when taxes are, and how it qualifies, and the IRS identifies, if you have an average lease length of less than 7 days, which is why most short-term rentals qualify for that. Now all of a sudden they let you turn this into an active trader business. And so you're able to accelerate bonus depreciate and accelerate that depreciation against all of your earned income. And that can be huge, especially if you're a high income earner paying a lot in taxes. We're able to usually take, if we put 20% down on a property, we're usually able to take that property and be able to reduce our taxes by at least about 70% of whatever we put down on the property. So like a property I just bought was an $800,000 property. I put $200,000 down. We just did the cost segregation and the material participation. We had a write-off of about $380,000, reduced my taxes now by about $160,000. So $160,000 less than I'm paying the IRS that went toward my short-term rental. So I net into that property $40,000. Now you start running your returns on that. It's crazy, right?
Shawn, let me tell you my recent story just for case study.
Yeah.
Because I got you beat on that one. So
I love it.
I used a second home on this and put 10% down.
Oh, wow. Yeah, that's crazy.
And this was a $3.2 million purchase. And I had so many banks tell me, oh, you can't do that. That's a jumbo loan. You can't get a second home loan on that. Well, I said, yes, I can. I'm going to find a bank that will give me that. And so I went to, like 10 different banks and finally found one that would. And they don't even have mortgage insurance at those points. So at least that bank did. So that's fantastic. So 10% down, $320,000 roughly. Ran a cost segregation study, got roughly about 20% on the cost seg study. So I actually will have a tax reduction of around $640,000 from buying that with 10% down.
So you buy the property, pays for that and something else, right? And it only works people need to understand. Like if you're making $50,000 a year and you're only paying $20,000 in taxes, you're not going to get, it's not like you're getting a refund for that. But if you're a higher income earner, which if you're buying these properties and they're more expensive, like you take that and all of a sudden, the IRS is not, in your case, paid your down payment and your down payment on another one, right? It's crazy to be able to do that.
And that's how you expedite your real estate success. I mean, taxes are, I say it almost every show, right, Adam? Is taxes are your biggest expense, and that's the easiest way to give yourself an immediate raise. Is use real estate in all areas to reduce your taxable income, reinvest that money, buy other assets that have additional tax benefits, compounding effect, blah, 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 with generational wealth. So, but that's one other benefit I think I probably should mention as well. I'm building my pro list here as we go through this, but the potential to use a second home loan or lower down payment on a short-term rental if you plan to use it, of course. Whereas, long-term rentals is pretty much 20-25% down. Another added bonus there.
And most people, especially when they qualify, those are full doc loans. You're going to have to qualify for those, but it's a huge benefit because Fannie and Freddie allow you to do that, and they allow you to use them as a short-term rental. It specifically says you can short-term rent them out as long as you plan to use it as well, right? It should truly be a second home that you're planning on using. But I've owned plenty of second homes I didn't rent out. And it's not like you're using them all year long ever. You almost feel guilty as little as you use them. And so, but if you truly plan to use it, now all of a sudden you're buying these investment properties with 10% down. And now that power of leverage, everything else kicks in. And to your case study example, you start compounding the taxes and everything else. It can be a really fun game to play, and you can parlay into multiple properties pretty quickly.
Fantastic. So when it comes to actually owning, you mentioned kind of selling the property. Just out of curiosity, when you sold the property, if you're selling it to an owner occupied and not another investor, what do you do with all the furniture that you bought?
Yeah, it's a great question. Most of our properties are in resort type communities. And so in this case, it was a resort community. There's not very many owner occupants in that community. So in this particular instance, somebody is still buying it as a vacation home. Even if they're not going to short-term rent it, it's going to be a second home, vacation home. So a lot of times those properties are sold furnished anyways. It's common to see those properties sold furnished. If you are selling to somebody that's like, hey, we don't, we're in a, more of a residential type of an area where you do have a lot of owner occupants, you just like anything else, you probably have a yard sale and sell it all, right? Or, we don't typically move it from another property. We purpose furnish our properties specifically. And so we typically try to sell them furnished if we do sell them. Now, that being said, Adam, I don't sell properties that often. So we don't typically buy them to resell them very often. So we don't have to deal with that very often, but that's what you would do.
And part of the benefit of being, joining your community, Shawn, is that you have not only you have the coaching program to walk people through and give them a step-by-step action plan on how to be successful and take their rentals to the next level. But you also have built a community, right? And then I think that's actually the most powerful aspect of
100%.
Something like this, because you can bounce ideas, share ideas, and I think that is just paramount, being part of that community, because that is likely there's going to be some people that may be already investing in an area that you're interested in. No property management contacts on the furnishing side. There are companies that furnish specifically for short-term rentals, right? Like that's a business model that you could tap into. And so that's huge. One thing I want to talk about is just kind of the market, kind of how we've seen things change over time with the short-term space. We were talking before the show, and Adam brought up the concern about, what happens if, something changes and my property is vacant? Like that's a concern for people. I mean, how do you address their concerns with the market potentially changing, or like that not being a vacation destination? How do you mitigate your risk with that?
Yeah. And that comes down to that initial stage of underwriting the properties and the area, right? We're underwriting these locations. And one of the big things that you want to look at is what are the major profit drivers in an area, right? If the major profit driver, for example, is a national park, you're going to have other secondary profit drivers. But let's say the national park is the major profit driver. That's not likely to change much, right? That the national park's
probably not going anywhere.
Right. But if your major profit driver is around, maybe it's around a major festival, a music festival, or a big event, those can move around a little bit. Sometimes they get shut down, like we've seen, right? And so depending on what your profit drivers are, you can decide, okay, what is the likelihood that profit driver is going to go away, right? People are not going to stop traveling. Even during COVID, we saw that, hey, nobody can go anywhere. We're still going places, right? People are still moving around. And so but it comes down to what are those major profit drivers. And sometimes, like in an urban center or it may be next to the big medical centers, for example, you can have, okay, how does it underwrite as a long-term rental, right? There are areas that you could have some crossover, because sometimes people will say, well, what about the plan B? What if you had to turn to a long-term rental? It's a good question, because some areas that would work very well, other areas it wouldn't work well at all. And so you have to say, okay, my area that I just talked about by Yellowstone, I'm not going to turn that to a long-term rental. Then nobody lives there, right? There's 300 people in that town. I'm not going to turn that to a long-term rental. So if somehow the profit driver changed and people aren't coming there, then you're saying, okay, I'm either selling this or I've got to keep the asset, right? But you can, depending on your propensity for risk and what you're really trying to do with the portfolio, if you're like, I really want to have the option to turn it into a long-term rental should something happen, then those are the types of areas we need to look. We need to look at areas that have owner occupants, and we need to look at areas that have different types of profit drivers that are bringing people in on a short-term rental basis. College towns right now. College towns are a big are on our radar right now as a really good areas for short-term rentals, but they also have a really good potential for longer-term rentals, right? And so that's a type of an area that has a profit driver with the college, a lot of different things going on typically in those areas, and they can work well for short-term and for long-term. And so when you're underwriting them, you look at both ways.
I love that you said that, because this just resonates with me. On one of our one of our first properties that was a long-term rental that we actually lived in we were way more successful with it as a short-term rental. This was a military base when I was stationed in the military base in North Dakota. Who has short-term rentals in North Dakota, right? Nobody goes there. But the military bases, and actually after we did this, we found out like, hey, there's actually a lot of people in the military or veterans that are doing this. Because while there's military members looking for long-term, housing opportunities, because of how the military works, and especially depending on the base, there's a lot of short-term training where people could be out 2 weeks at a time, and it's like they're on consistent rotations.
Yes.
So we literally had a short-term rental that was rented year-round, and it was rented 6 months out, because it was just like we tapped into this military community where guys were out there between 1 to 3 weeks at a time on their training schedule. And there's usually 2 to 3 of them in a training like pod or group.
Yeah.
And then the next ones are automatically coming in, and they're just like, hey, rent this house out. This is great location. It's just like clockwork.
Yeah. I'm so glad you mentioned that. And it just shows there's so many different types of markets, but military areas, they've got all kinds of opportunities for short-term rentals. I live right outside in Utah. We've got Hill Air Force Base. One of our members has 3 properties actually right around the base in Layton, Utah. And it's not an area that people are going to vacation, but she stays completely booked with the people who are coming in and out of the military base. And if they're there for 2 or 3 weeks, they don't want to stay in a hotel room, right? And so she operates really, really well in that area as well.
Yeah, it's interesting. It's just no. I mean, it is more involved. That's the thing about it. You have to be more active, and you got to be intentional. Join communities, and get in touch with people that are have those top 5 performing assets, and see what they're doing to be successful. Shawn, I love hearing case studies. Is there any other kind of unique case studies that you want to share with us, just with any of like your students, your community, some of your personal rentals that are just kind of like big wins or really interesting short-term rentals?
Yeah. We talked about our property in Yellowstone. I'll tell you a story that I always find really interesting. And I think that it bodes well of really understanding the game. One of our students has a property down in Destin, Florida, and ended up looking at this property and buying the property. They were looking at the property, and it was on the market. And you guys know how the real estate markets have been the last couple of years. This property was on the market for 5 months. And so it was listed at $750,000 in a market listed on the market for 5 months in a market. The average days on the market was 6 days. So, I mean, everybody's like, something's wrong with this property. Well, when you looked at the property, it was a short-term rental that had been operational for 8 years. The most it had ever made is $63,000. That was the highest gross revenue it had ever made. So that's exactly what everybody's doing. They're saying, well, this property it doesn't make any money. Can't make any money with this property, which you can't. Your break even on short-term rentals with full service management is usually around that 10% of your acquisition. Your gross revenue needs to be about 10% of your acquisition. So he looked at this property, though, understanding the game, understanding the market, and brought it to us and said, hey, Shawn, this looks like it has way more potential than what it has been doing. We looked at it and we said, yeah, it does. And everybody's ignoring it because it's not producing right now, right? But they're missing why it wasn't producing, because it still looked like a nice house. It didn't need a big remodel, didn't need a whole bunch of different things, needed a few little things that he was able to recognize. And we said, I think you ought to make an offer on it. Well, he ended up proceeding, made an offer on the property, went in, did some new furniture, didn't do everything brand new, but updated the property, put a little more lipstick on it, made it look nice, not a full rehab, bought it for $750, was into it about $800 by the time he was done with furnishing and everything else. And the property, his very first year, his gross revenue was $163,000. So, and then the next year was $230,000. And so the point of that is, and the reason I tell you that story is, there's a lot of people that look at these properties and these markets right now and say, I can't make any money here. I've tried to do a short-term rental. I've looked at this and I've ran the numbers and they don't make any money. But typically how somebody runs the numbers, they look at the acquisition price and they look how it's performing. Remember, I told you that most people are performing right in the middle or bottom of that market. That's where the bulk of the business is. Everybody's in this, okay, I've got a nice property. My neighbor has a nice property. He's $300 a night. So now I'm going to be $275. And then the neighbor says, well, I'm going to be $250. And then it's $225. And it's a race to the bottom because they think that they're competing on the house. Well, we see that across the board. And what I'm really proud about Jeff for doing this is coming and saying, hey, I recognize that there's a good opportunity here on a property that everybody's ignoring. And it's turned into be an absolute home run for him. I mean, he kills it with that property. So I tell that story mostly because a lot of people think that they look at these markets and these properties and they don't make money because they're like, it's too crowded. Prices are too high right now. That's not the case.
Fantastic.
I love it. There's and it's all goes back to being creative and knowing the market, and also like knowing the numbers. Why are you putting in the numbers and using like what data are you pulling? And so this is why it's fundamentally essential to have specific data that you're looking at, because that's going to allow you to make educated decisions on where to invest, where the opportunity is. Otherwise, you're just shooting from the hip, and you really got to use that data. So again, we're going to throw up this link where you can get a free copy of Shawn's book, which we feel super special because Shawn's never given this away for free. So visit renttoretirement.com/STR. Shawn, it's been a pleasure having you. I mean, this is just so cool, and it's been cool working with you over, and getting to know your program and see some of the success stories. I actually met people in your community that were having success stories before I even had a chance to meet you or kind of know anything about your program. It's just cool to see this come full cycle. Is there any final words for anyone that's looking to get into short-term rental? Any piece of advice you would offer for them on like what is the next step for them if they're wanting, or if they have short-term rentals and they're not seeing success, or someone who wants to get in the game? What would you tell them?
Yeah, I would tell them, don't be afraid to peel back a few more layers of the onion, right? Just start moving forward. Put yourself in those communities, put yourself in front of those people that are actually doing it, because this is a really, really fun game. Don't be intimidated by it. Sometimes we talk about some of these things and it feels like there's a lot going on. Sometimes there is a lot going on, but once it's like when you dump a puzzle out on the table for the first time and it's got all the pieces scattered around. If you spend a little bit of time, all of a sudden the picture starts to come together and you put it together. And that's how short-term rentals are. Short-term rentals are now becoming more of a mainstream asset class. There's really specific things that we can do to make this very logic-based investing. So don't be afraid of it. Just go get the book. Go to renttoretirement.com/STR. Go get our book and learn about the process. It's not rocket science. And so we'd love to help you and point anybody in that right direction.
All right. Well, Shawn, thank you so much for joining us once again. He is founder and CEO of Vodyssey, which just so happens to be the largest vacation rental education company in the world. Really appreciate you spending time with us today. Again, it's renttoretirement.com/STR. If you have any questions, email them to us, podcast@renttoretirement.com. That's podcast@renttoretirement.com. Don't forget to leave us a review on whatever podcast platform you're listening to, and we'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.